2021. Hope you had a good week of trading. Let's take a look at the numbers here first to start out. We did lose a little bit of ground for the SPY, the Nasdaq, the Russell, Semiconductors, the Biotechs, and these should be colored red as well. But basically, we had a little bit of profit taking this week. Still, obviously, in a major uptrend in all of these markets. By the way, a quick word of thank you to our sponsor, which is Microsectors. They have a leveraged bank stocks up and down 3x. That's BNKU and BNKD. Let's take a look at the S&P 500. We still are in a clear uptrend. We're above the rising 20-day moving average, the year-to-date volume-weighted average price. We're above the rising 50-day moving average. When we look at a 30-minute time frame, you can see we're still above the month-to-date volume-weighted average price as well. We're seeing that maybe we're just starting to pause a little bit in here, and perhaps this is turning into a little bit more of a time correction, but still, we give the benefit of the doubt to the buyers because the primary trend is higher. And the same is true for the Nasdaq. This week we came down and tested this prior peak, which was also the location of the month-to-date volume-weighted average price and 20-day moving average. So we have an important level in here at about that 328 level. If we break below and hold below that next week, then perhaps we see a test of the year-to-date volume-weighted average price, and that would be, cause some damage to individual names, obviously, but it still wouldn't hurt the primary uptrend. It would just be a little bit deeper of a pullback within a primary uptrend. I still look at this market as innocent until proven guilty. I'm not looking at it as something that's going to break down. I just want to be aware of the potential levels where we might encounter some trouble if we do start seeing a little bit more aggressive profit taking. The Russell 2000 still in a clear uptrend, just a beautiful pattern of higher highs and higher lows, and this is looking like an important higher low that it made this week, right above that rising 20-day moving average. Looking at the 30-minute time frame, you can see that's also the month-to-date volume-weighted average price, and today we got a bounce from there. So this will now be an important level to measure risk against moving forward. As long as we stay above the 220 level, then the intermediate term trend is still innocent until proven guilty. By the way, if you're watching this on YouTube, I'd appreciate if you would give it a like, a thumbs up or whatever they do there, and subscribe. I don't ask for that often, but I was told it helps the algos move it up in YouTube. So if you do that, I'd appreciate it. Semiconductors also, this week we saw that we started out the week with some profit taking, and of course it was a 4-day week. Here's our week to date volume weighted average price. We got back above the rising 5-day moving average. So for this group, I think that next week we want to see this level here at about 245 continue to hold, and then below that we have, or actually that's about where we'll see the month to date volume weighted average price come up to meet prices if it comes down towards that level. So for instance, if it did something like this. But again, we're in a primary uptrend. It's not something that I'm looking at as, that it made a top or that it's topping out. There's zero evidence of that. So we continue to give the benefit of the doubt to the buyers. The biotechs, as you know, we would been stopped out over here about a week or so ago. And now we're starting to see a little bit of signs that the buyers are emerging and coming back into this. Now, the month-to-date volume-weighted average price and 5-day moving average kind of capped it off here today. But if we take a closer look at what we're seeing under the hood here, this kind of is looking like a shoulder, a head, and a shoulder. So I think that next week, if it gets back above 168 and holds that you could probably get it involved for the long side with a worst case stop below here. If you wanted a more aggressive stop, probably just even right around that 164 level, because again, the primary trend is still higher, just a picture perfect trend here of higher highs and higher lows. And if it breaks back below here, well, then that uptrend will be broken, the pattern of higher highs and higher lows. So we would want to move to the sidelines and reassess, let the market set back up again. Financials, as mentioned, these are at an all-time high here. I don't consider them great trading stocks, but maybe if you're trading them with those leveraged ETFs, they're a better opportunity. So they are in a primary uptrend. This week we saw that the gap up held, and that's where we found buyers. So this is going to be for next week the important level at about 31.75. As long as it holds above that, again, it's innocent until proven guilty. Let's take a look at some stocks. I was on Yahoo Finance today and mentioned shares of Beyond, And shares of Beyond Meat, the last time I had mentioned it was right in here, and that was just a super trade. Now it's pulled back, it's come back in and closed the gap completely. We also see that it's right at the year-to-date volume weighted average price. We've got a rising 20 and 50-day moving average. The problem here in the near term is that we're below a declining 5-day moving average. So as you know, I don't personally like to buy pullbacks because they can continue to pull back. So next week, what I'd really like to see is maybe some recovery in here, come back up into this range, and then I would rather pay 170 for it up here and know that I have momentum at my back rather than trying to pick a bottom. Now, if you are trying to pick the bottom, then perhaps this is in that general area. But again, even on the shorter term time frame, we closed right at the lows today. So I'm not ready to purchase shares of Beyond, but I think that it's something definitely worth watching next week. I would also keep an eye on DraftKings, DKNG, just a real nice little consolidation here. You could call that a flag, and this is the flagpole. So now, again, it's not the perfect buy yet, but if it were to get above this little peak right here, maybe a stop just below this level would be the initial way to do it. So in other words, buying on strength, and then a stop underneath today's low. That also gives us protection with that rising 5-day moving average. APPS is another one that's been a big winner and kind of the same type of setup as DKNG. If you look at the monthly chart, again, it's had this phenomenal, massive run. Doesn't mean it can't continue higher, but just be aware that, it is stretched. Maybe it's heading for 100 plus, and, the way to get there could be back above today's high. We are above we're fighting the volume weighted average price from that peak. So if it were to get back above today's high and do something like this, I think you could probably set your stop, probably just underneath at about 84.5 or so. It's going to take a little bit of time to develop, so we'll see how that goes. And of course, it's something that I always update for subscribers to Alpha Trends, and I wanted to remind you that there is a sale currently at Alpha Trends, and you can go to alphatrends.net/599 special. That will give you 1 year of alphatrends.net, and that's discounted from the $799 a year price. And by the way, that price is actually going up to $999 a year at the end of this month. So just something to be aware of. Anyways, APPS, Sohu is another one. We had a great trade in that one just a week and a half ago. Purchased it right in here and had a really nice run. Well, now it's pulled back. We had actually gotten stopped out right here at this point and at that point. Now it's looking like the buyers are coming back in again. So perhaps back above today's high with a stop somewhere under here would be a good way to trade Sohu. And then TGI, if you look at this one, Triumph Group, nice looking weekly chart. Here's where we are basically, and here's where we have the potential to go is the way I see it. We've got this hole to fill in. We're very little volume traded, so there's not a natural source of supply from people looking to break even. So it looks like it could head up towards that level. And the way I would want to purchase it, here you can see it's holding the month-to-date volume weighted average price. It's a little bit early because the 5-day moving average is declining, and the volume weighted average price from this peak is right overhead. So I think that maybe if it were to do this and then hold above it, and then perhaps next week that TGI could be a good trade on the upside. Again, I hope you had a good week, and I will talk to you next week. Thank you.